This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Before this week's inflation updates, the broader picture had already been complicated. Over the past several months, inflation has been easing from its earlier highs, but it has not been moving in a straight line. Some categories, especially goods tied to global supply chains, had shown improvement, while services and everyday essentials stayed elevated. Households had started to feel a little relief in certain prices, yet many budgets were still tight, especially for rent, insurance, and food away from home. The overall mood going into this week was cautious optimism, with a clear understanding that inflation was cooling unevenly rather than disappearing. Looking back over recent weeks, the trend has been one of gradual slowdown rather than a sharp drop. Price growth has been less intense than it was a year ago, but progress has been slow. Energy prices have been volatile, bouncing from week to week, while shelter-related costs have remained a steady source of pressure. Businesses have been more careful about raising prices, but they have not been rolling them back in a meaningful way. This has created a situation where inflation feels lower in theory, but still very present in daily life. This week brought another mixed inflation signal. Recent updates and commentary suggested that overall price growth did not accelerate sharply, which is good news, but it also did not cool fast enough to declare victory. Some goods categories showed mild softening, hinting that supply conditions are more stable than they were before. At the same time, services inflation stayed firm, reflecting ongoing labor and operating costs. The takeaway from this week is not a reversal, but a pause that shows how sticky certain prices have become. Recent releases and official remarks reinforced the idea that inflation is still being closely watched. Policymakers emphasized patience, signaling that progress matters more than any single week's number. The message has remained consistent. Inflation is moving in the right direction, but not yet at a pace that allows for complacency. Markets reacted calmly, suggesting that this week's information largely matched expectations rather than surprising anyone. The real trend right now looks uneven but stable. Inflation is not surging, which reduces the risk of sudden shocks to household budgets. However, it is also not falling fast enough to quickly restore purchasing power. The pattern suggests a longer period of adjustment where prices settle at higher levels than many people were used to before. This is a cooling process with friction, not a smooth glide. This week fits neatly into the recent pattern of mixed signals. Each update seems to confirm that inflation is becoming more concentrated in specific areas rather than broad across the economy. Goods prices are less of a problem than they once were, while services and housing-related costs remain persistent. That balance is what keeps inflation from dropping quickly, even when some parts of the economy show improvement. Overall, this week delivered a mixed signal. There are signs of weakening pressure in some categories, but strengthening persistence in others. It is not a setback, but it is also not a breakthrough. Inflation's direction is still downward over time, just slower and less evenly than many households would like. For households, this means relief may feel selective. You might notice fewer price jumps on certain goods, but monthly bills tied to housing, services, and subscriptions may still creep higher. Wage growth can help offset some of this, but for many families, budgets remain stretched. Even small inflation differences matter when they compound over time. As a symbolic reminder of how inflation touches everyday life, think of widely recognized figures like the U.S. president being shown in everyday settings in media coverage, not as a policy statement, but as a visual cue that inflation affects everyone, from households to the highest offices. Next week, pay attention to any new inflation-related data releases and updated commentary from policymakers. Watch especially for signs that services or housing costs are finally cooling, because that would signal more meaningful progress. Also keep an eye on energy prices, which can quickly change the inflation picture from one week to the next. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.